Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. For over a decade, the cyber currency market operated like the digital Wild West. Investors flocked to decentralized finance, or DeFi, under the comforting assumption that anonymity was a built in feature of a blockchain transaction. They believed that because there was no central bank or physical branch, their transactions were invisible to traditional tax authorities. But the era of the IRS looking the other way is officially over. The IRS has spent hundreds of millions of dollars building advanced data analytic frameworks, partnering with software companies, and issuing Jane Doe summonses to major exchanges. Under the current enforcement push, tracking digital assets is one of the absolute highest priorities. Today, we peel back the curtain on how the IRS tracks digital footprints, the traps of decentralized trading, and the precise accounting rules you must follow to protect your wealth from catastrophic penalties. To navigate digital asset wealth, you must first understand exactly how the IRS classifies cryptocurrency. The IRS does not view crypto as a currency, they treat it as property. This single distinction completely changes your tax liability. Every single time you trade, sell, or swap a digital asset, you are triggering a taxable event. The three most common ways that catch investors off guard are these. The first one is selling crypto for fiat currency like the US dollar. This is a straightforward capital gains transaction. The second way is using crypto to purchase a good or service. If you buy a vehicle using Bitcoin, you haven't just bought a vehicle, you have technically sold your Bitcoin at the current market value, triggering a capital gain or capital loss. Third, and this is the most dangerous, is crypto to crypto swaps. If you trade Ethereum directly for stablecoin or an alternative token, you have executed a taxable sale. The IRS tracks.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
So the IRS is currently tracking every single transaction based on the earlier investment that I spoke about. So you don't want to be that casual investor who is stuck in the past of thinking, if I don't report it, how will they ever know? The reality is that the IRS has built a digital dragnet to make sure evasion virtually is impossible. And they are laser focused on this topic. The enforcement of this topic comes at the very beginning of Form 1040. The IRS places a mandatory explicit question right below the name and address and asks under penalties of perjury if you have received, sold, exchanged any digital asset. Checking no when a blockchain transaction says yes, it will shift your case from a simple mistake to a criminal fraud charge. So be honest when you answer these questions because they have the information. The digital cyber currency space is moving at breakneck speed, and trying to handle or manage crypto accounting on your own is extraordinarily risky for your family's kingdom. This is exactly why KingLife is your essential financial safety. Join us at KingLife, become a member so that we can help you put the right systems and structure in place to manage efficiently. I'm Nathan Weaver. Live with confidence, lead with integrity, and build something that lasts.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.